Welcome to Numbers Don't Lie, Marketing Insights for Accountants. I'm Janel Sikora.
And I'm Brad Pinzer. And today I have my good friend Steve Gelley with us. Hey,
Right.
Steve, how are you?
Hey,
Good.
Steve.
How are you?
Awesome.
Thanks for having me.
Yeah, man. So excited for you to be here. And so Steve, you're the CEO of Blueprint Ventures. Can't talk today. And also you've built and exited several SaaS companies. And can you just tell us a little bit about like Blueprint Ventures and what you're you're working on?
Yeah, definitely. Yeah. So Blueprint Ventures and Open Access Ventures, they're two sister funds. Blueprint Ventures focuses more later stage businesses, large private equity plays where we tend to conglomerate, roll up, and then look for liquidation opportunities for founders that are in markets that traditionally don't sell. So if you think of events, accounting, at some point we'll go into the plumbing business because I always talk about plumbing. But any of these service-based businesses that really rely on a founder or individual, they don't have liquidation opportunities. So we're trying to put together a structure that allows everybody to have a succession plan.
And interestingly, for our audience, you are a CPA.
I think I am still a CPA. I will check New York State. The last I checked, I am still a CPA. Yes.
So before you even got into your tech ventures, you had a CPA firm, right?
Yes. Yeah. I started my whole career in accounting.
So Brad and I were talking this morning, and we thought we remembered that you had mentioned that you had, when you owned your CPA firm, that one of the ways that you grew was by how many people do it, which is buying other CPA firms, but then also you were a really smart marketer. So we were curious, what worked better for you? What was better for your growth? Was it purchasing another firm, or was it just being really smart about the marketing you were doing?
So when I started off, I just assumed you have to acquire an accounting firm. That's how you grow. So I actually legitimately acquired a 2-partner accounting firm, came into it and was like, okay, this is great. I got a couple $1 million of revenue, and now I'm going to go out and find another one to buy, and then another one to buy. So I started doing the roll up. When you actually look at the cost of acquiring a customer in the purchase model, it's drastically cheaper to market for a customer than it is to actually buy accounting firms. So what I learned later in my career, unfortunately, after I already bought 4 or 5 accounting firms, later in the career, as I realized that you could actually market for these customers, drive customers into your business for a fraction of the price of what you're buying them for.
Interesting. And how did you do that? Like, what tactics did you use from a marketing perspective that you felt were higher ROI than purchasing?
We tend to excel in PPC. That was probably our biggest driver. Back then, when I was marketing, because you're talking about like 2014, there wasn't as much traffic going on there. Accountants in the old days, I guess, which is weird for me to say now, they were like, I don't think you were even allowed to market at some point with like the ethical requirements of like the CPA license, or if that's not true, all the CPAs always went to that where it's not, where we weren't allowed to market. So when I first started marketing, we were able to acquire customers for hundreds of dollars. That's it. Like getting, full bookkeeping customers through the door, anything, you name it. We were able to acquire these customers for a couple $100s. Now, with some of the tech giants coming into the space and a lot more money going into Google and PPC, I think SEO is becoming more and more important. So that, it's just a longer term play.
Mm-hmm.
And then so tell me how you transitioned from that, from being a CPA, and then you got into software.
Probably what the industry is feeling now, which is the lack of, human talent and where we, the human capital component of our businesses. I felt like I hit my ceiling right around 3 million of revenue is really where I felt like I hit my ceiling. Answering the same questions over and over again, finding the same staffing issues. We centralize operations. So I actually acquired multiple firms up the East Coast, but we had like a shell office, satellite office really on site. And then all of the operations were centralized back in my main office in South Florida. Answering the same questions over and over again, finding that my director of operations was literally walking around our office with like a clipboard, checking stuff off. It was like we hit our ceiling as far as scaling goes. That's where we pivoted, and I looked at, all right, how do we leverage technology to increase the efficiencies inside our organization, and then pivoted that into a large technology company.
And which was your first one venture?
From the tech side?
Yeah.
Zendu was the first tech. Well, technically, there was some others that I did before Zendu, but Zendu was really the first real one that I did. Yeah.
And can you just tell everybody like kind of what Zendu did and does? It's still around.
Yeah, Zendu's still around. Zendu's online bookkeeping and accounting, servicing small business owners. I haven't been as involved since I sold, but my understanding is they're still focusing on those small businesses, probably under 20 employees is where their customer base is. Bookkeeping, tax returns, everything.
That's one of the things that that we see and hear a lot from the firms that we work with is they all want to work with the small business owners, but yet you've got big tech out there spending major dollars on advertising to get to those same small business owners, just completely bypassing the CPA channel. So how do you feel about that? And tell us a little bit about where that led you.
Yeah, so it's going to be a struggle, I think, for the traditional accounting firms to try and keep up with the level of technology and marketing budgets and venture capital that has come into commoditizing the accounting space. They've already accumulated over 1% market share in when you look at the history of accounting in relatively a short period of time. And typically the data would show that over the next 5 years, that 1% market share is going to start to exponentially grow. And before you know it, it's going to become 3, 4, 5, 10%, where it's really making an impact. I think today, no one's feeling the impact of it, but over the next decade, it's scary to see what that does. We feel strongly that these accounting firms should all be running Blueprint specifically feels strong that these accounting firms should be running differently these days. I think the accounting firms should be running their business heavily driven on systems and processes and leveraging technology to help facilitate growth. We also feel that these accounting firms need to have a succession plan. Human capital is a massive issue in the accounting space, which is why we opened up a company recently called Arrive, Arrive.accountants, where we're going after the accounting space to provide these CPAs the infrastructure that's needed to actually scale, grow, and compete with the tech giants that are coming out.
It's pretty exciting stuff. Yeah, I know. I'm really excited to see what happens with Arrive. It's truly revolutionary. I've been in the profession for a long time, and I sold technology myself, but I've never seen anything as revolutionary as Arrive is. So it's going to be very, very exciting to see it.
Awesome.
And one of the things too that we hear mixed feelings about with a lot of the firms that we work with is AI. It's in everybody's conversation. Every sentence has the word AI in it these days, but it's something that accountants either fear or they're leaning into. There's no middle ground there. And, there's some that I wouldn't say necessarily fear it, but they're like, I don't even know where to start. I don't know what to do. There's this thing called ChatGPT. I've never been in it. But, Brad and I were having an interesting conversation yesterday about, where the general public is with AI right now is, they're kind of learning how to play with ChatGPT and what it can do for you. And some are a little more advanced than others. But where it's going is more important, which is connecting all of those processes. Do you want to talk a little bit more about your vision for Arrive and how that incorporates AI?
Yeah, Arrive and all of our businesses that we touch, from open access venture side and Blueprint venture side, we typically lead with technology in these industries that haven't seen the technology before. That's our model. We don't allow the word AI to be used only because same thing that happened in Web3. I think that everybody comes out and starts talking about, Web3 or blockchain, and it becomes a buzzword. And then you get a lot of bad actors that start coming out quickly for a money grab, and they're building, air, selling visions, but not truly providing you with the technology behind it. There is legit real AI. It's going to be the future in a lot of these service-based businesses, knowledge work clouds, service through software, whatever you want to call it these days. It is the future of it. We're leveraging it in a very, very sensitive fashion with Arrive specifically. When you have an industry that's built on a license and licenses, you can't just go out and allow some sort of open AI source to try and provide you that information. Same thing with legal, right? I mean,
Yeah.
I'll go in all the day long and try and prompt GPT to draft a legal document for me. Then I send it over to our legal team and they're tearing it apart and marking it up. There is a license for a reason and you need to do that. So we are heavy algorithmic. And then we leverage AI on top of the algorithms to be able to make sure that we build and enhance it. But in no way do we want to lead with AI today. We also are strong believers in every industry that comes with a license or knowledge that the human has to stay involved. So while we are training our AI model, in this case Ava, who's the AI agent inside Arrive, nothing that Ava does on behalf of these accountants and these bookkeepers inside these organizations will ever be autonomously delivered to the client. It always is running through a licensed individual that will read it, approve it, change it, train it, and then allow it to kind of go out. So then over time, the suggestion becomes more and more accurate, but it's not removing the human from the process.
Steve, can you explain when you say it's more algorithmic, what you mean by that? Because that's a big word.
So people think that AI and Gen AI truly is thinking and making decisions by itself, so to speak, right? Off of models, right? So it's running and reading models. I feel like what's going on is that the true thought of AI, or when these companies are coming out saying that there's AI, I don't think that they're truly building AI on top of it. So we'll layer a previous business that I had. We built 5,372 algorithms that are specifically built, tailored towards a license or an industry profession that's been in existence forever. So we built the algorithms at that point so that when the algorithm gets picked up or we need to apply that algorithm, we're actually providing an algorithm from a licensed individual, not providing an algorithm that the computer or AI generates. I mean, we could tell your audience, go to GPT, prompt GPT to run a calculation on, depreciation off of this and that and see how accurate it becomes. I think there's a lot of misleading out there.
So the algorithm is really just the logic. Is that what that is? It's like
the algorithm is truly the logic and the knowledge, and then you can layer AI on top of these algorithms to enhance it, take it further, know when to apply it, when not to apply it, and that's what I'm personally a firm believer on.
Gotcha. Yeah, no, that makes sense.
So let me shift gears for just a little bit. I want to get into something that we get a lot of questions about these days, which is, so the firms that we work with are firms that want to sell more advisory services and they want to sell more monthly subscription services, whatever that is, whether it's CAS, whether it's whatever they call it, maintenance. If you were back in the position where you owned a firm again and you've got all this compliance work going on and all of these deadlines and you have to do that, right? But you really want to sell more advisory services, more monthly services. What would you do? Like, what would be the first things that you would do to grow that side of the business?
I think they're stuck. I think the industry is stuck because you can't properly advise unless you have solid compliance work handled behind you, right? So your advisory is only as good as the financial statements and data that you're looking at to analyze to properly advise, which puts everybody in this really weird situation where they want to get into advisory, but you're stuck because in order to properly advise, you still need the bookkeeping work done behind you, and tax planning and all that type of stuff comes into play. So, but that's where they need to, the industry as a whole needs to lean towards technology and not towards the human capital constraints. What the biggest value that we had was all of the accounting firms that I had in the past were geared around bookkeeping. And making sure that bookkeeping was upfront and first and foremost in the service offering that we're providing. because from that bookkeeping is telling you where you could actually jump into and advise. And that's where you could then dig deeper to find, traditional, KPI issues, variance issues, stuff like that, where then you could sit down with the client and really provide them value. No client that I would say 10% of my clients actually value the financial statement, but
Right.
100% of them would value the information that I was providing them from those financial statements, meaning restaurant, your food costs are off. By the way, I see that you use Cisco for food. Have you looked over here? Because we have other customers using this other, food provider that you might want to look in this direction. And let's collectively get 20 of us together and call Cisco and see if we get a 3% discount in food costs. Like little things like that are tremendous, and they would need us as accountants, as advisors, to really be able to execute it.
Yeah, that's absolutely true. And speaking of the word advisor, if you hire an advisor, you're investing in them because you're going to get an ROI. And another conversation that we have all the time is, and I hear this, is I'm tired of being looked at as an expense, that necessary evil to the business owner's bottom line. I want to be seen as an investment. So, what Brad and I talk about a lot is the messaging, and it has to start with messaging. Everything comes down to messaging. And when you've got 86,000, 85,000 accounting services firms in the United States, that's a lot. That's a very red ocean that you have to really focus on your messaging to differentiate yourself. So, we really work hard to help people change the narrative. Any thoughts or advice that you would have in terms of, if you're a firm that's really trying to step more into that advisory space, how you would go about telling them to change the narrative?
Yeah, I think everybody should be leading with it. Otherwise, you're competing against these tech companies that are doing bookkeeping and compliance work for a fraction of the price that you could even offer it for. So I don't think that they have a choice. Again, which is why we are trying to push Arrive as that solution. But currently today, I don't think that there's a choice. You have to figure out how to compete in that area. Once you land that down, you have to differentiate through advisory. That's the one area where us as an industry would win against tech. They're not licensed CPAs, most of them. There's a lot of companies out there that are, but the ability to scale the licensed CPA, the knowledge, the history, the experience that we have in the industry as the accountants, it's very difficult for somebody to step in and compete with that. So you have to differentiate through advisory and truly make an impact to your customer base. I think the marketing also, I'm curious as to, and I know why my mindset going into it was I have to acquire to grow. Mike, I actually have a question for you guys is, why are more accounting firms not looking to market? And they're like, everybody that we're talking to is, yeah, we're going to make a couple of acquisitions. And I'm looking at it like, well, what about marketing? You could do a fraction of price. Do you see anything from your side as to why they're not going that direction?
Yeah, that's been really interesting. So luckily we have lots that are marketing, but I think that in terms of acquisition versus marketing, I think when a firm looks to acquire another firm, a lot of times that's for the talent, because we are in this major talent shortage. In fact, I just saw a LinkedIn post today by somebody that I admire very much, and he acquired a firm not too long ago and wasn't really excited about it. Actually, it was a few years ago, and wasn't too excited about it. Lost 40% of the clients.
Yep.
And so he was really down on the whole idea of acquiring because he thought, this doesn't make any sense. Then he crunched the numbers, and of the clients he kept, I think he said the ROI was like 700%, which is super high. So I think it comes down to a couple of things. I think sometimes firms, they might want to acquire, but then you go through a broker and you're going to pay a big fee. There might not be a good culture fit. And then there's that fear of, I'm going to acquire and all these people are going to leave, because that does happen. Or I'm going to acquire and I'm just going to get a bunch of tax returns, and that's not what I wanted in the first place. So I think that there is a fair amount of firms that want to acquire. But, what's interesting is there have been so many different programs, like even Thomson Reuters has a practice forward program. There's tons of them out there that rival that are teaching firms how to package up and sell their services. They teach them really well how to package it up and what that looks like. But then where we come in and where we've been really successful and where firms have a huge need right now is implementing that. And they understand that they've got to change the narrative. They understand they've got to differentiate themselves. They maybe aren't ready or don't want to go out there and purchase a firm. And some of them are at a phase where they're like, we have more business than we know what to do with, but the business that we have, we don't necessarily want. So if you can help us button up our services and set up the automated marketing and sales engines and messaging and make our website perfect and all this stuff, then we can focus on, as we do bring in new ideal clients, they're going to be the right clients versus, and then they'll be in a better position to cull some of those D-level clients, or even add outsourcing. We're seeing a lot of firms doing offshore, outsourcing these days too.
Yeah, it's wild.
Yeah, and I think it's also
outsourcing.
What's that?
No, I was going to say it's wild. The outsourcing concept to me just blows my mind. It's wild. Just because my only solution back in 2012 was to outsource, and like we're 12 years later, and these firms are like approaching outsourcing more and more, and it blows my mind. Like that. I mean, the industry's lagging. It's lagging a decade at this point. I mean, and it's just a wild concept.
Yeah, and the world's becoming smaller and smaller. So
exactly.
Outsourcing makes sense. A lot of industries outsource, and outsourcing makes sense. I just think that we're in the accounting industry specifically, we are well beyond outsourcing. But I also understand that there has never been a solution brought to market that would give them an alternative to outsource. But it's just it's a wild concept.
Yeah. So what do you mean by when you say beyond outsourcing?
That they don't have access. It comes down to software. Is that what you're talking about? Like
yeah.
It comes down to software. Like there is no access to software that will truly increase the velocity of your workforce that exists right now.
That's exactly right.
They're probably, and this is the danger of new spaces coming out. I'm sure it's already happened, and in the next couple of years, there's going to be a lot of AI this, AI that. We're the solution. We're helping this. We're helping that. And that's what ends up tanking an industry, because the industry gets so gun shy to actually pull the trigger when a real solution comes along that they've already been jaded of like, we heard this, nothing's working in this space, and then the industry reverts backwards and says, I'm just going to go back. We're going to focus on outsourcing because that's been proven 10 years ago, when they stop being progressive.
Right. There's so many false solutions. I think what's happening now though is the AI is being integrated into the workflows. That's like what is being worked on right now.
Yep.
Instead of just like piecemeal, like going into ChatGPT or going into specific pieces of software and using the AI within those kind of, silos. And the next phase seems to be where the AI is going to be fully integrated into workflows and, these agents and all kinds of crazy techie stuff, is really kind of like the next move. I just wanted to touch on like the question you had earlier about the, why are companies looking to, why are kind of firms looking to buy other firms instead of doing the marketing? I think it's just because marketing can be it's multidisciplinary. There's a lot involved in doing it effectively, and like when you don't have a good message and your offer's not sound, you're just not going to be successful. And I think a lot of people have tried it and not done well and have kind of given up. And when if you know accounting and an accounting firm that you're going to buy it, and it's you understand what you're kind of for the most part getting into, and it's just much more tangible, I guess, and more comfortable, right?
I think that's what you hit on, and to me it's interesting concept because traditionally these accountants and CPAs are more conservative with their spend and their money, right? Like that's I think I'm still a CPA, so that's a stereotype that gets casted on everybody.
Mm-hmm.
We're less risk averse. We might be out there thinking that we're big risk averse, we're innovators, we're changing, we're different than everybody else, but the nature of the traditional CPA is that we're risk averse. but yet they're willing to cut a check for $500,000 to $1 million to acquire an accounting firm, or take out financing to acquire an accounting firm, when they could test a viable marketing strategy for 5, 10, 15, 20 grand and truly understand in a very predictable manner, okay, how much customers and revenue can I drive if I actually drop the same 500 grand that I'm going to get this customer list from? What does it look like? And that's the part where I think, again, it's that the industry hasn't been exposed to a lot of these things that other industries have been, and we're lagging. But every accounting firm should be able to cut a check for 10, 15 grand to test the marketing strategy to find out, does this work or not work, before they go out and look to acquire or roll up or buy another accounting firm. It's just their actions or our actions are completely opposite of the risk adverse nature that we're taking. And instead we're writing big checks, taking bigger financial risks, when we could do it in a more, structured manner of spend, test, learn.
That's so insightful. And you're right. You're absolutely right. And I think sometimes it's the accountant in them that sees, okay, I'm going to go buy this business. I know how much revenue's in it. It's something I can see. The dollars are on paper. But if I go spend $15,000, $20,000 on marketing, I don't have that same guarantee. And I think that's what they think of. Mm-hmm. Or the other thing that can happen, and we have clients that have been burned before with marketing companies where they'll work with them for a year and they get nothing, which is really frustrating. That's hard for us because, there are people out there that make a lot of promises and they don't deliver on them. And maybe they have sunk 20 grand into something and they've gotten nothing out of it, which really stinks. But
yeah, even if you're willing to invest the money, it's like you still got to find somebody that you trust, that is going to do a good job. And it's very difficult to know that when you don't know really what is SEO, or what is PPC or any of those kinds of things, A lot of
and then the concept of we get a lot of our portfolio companies that come in from the open access side. Their concept of marketing is not marketing. They're like, oh, we're gonna post an ad on social media for them to come in and and it's just like, no, that's not marketing. I think the awareness and the education in a lot of businesses don't know I don't think anybody truly understands what marketing is and what the process of marketing takes. But when you get it right, it's game changing for your business, and you might have to work at it for a little bit, but in the long run, it will be cheaper than acquiring. Because if it's not cheaper than acquiring, even any industry, accounting, any industry, if it's cheaper to acquire businesses than market, then these businesses would be, then the marketing cost would be so low because no one's marketing. You know what I'm saying? It's like they're just like the concept of supply and demand, of bidding and everything else. If it was truly that was actually true, then acquisitions would be running rampant and marketing costs would be lower, which naturally would offset, and you would acquire customers. So it has to work better in the long run.
Yeah, I agree with you. I agree. Yeah. It's an interesting, that's really insightful answer to another really insightful question too. Never really thought about that. And I've never really been asked that question before. But let me ask you one other question is, every accounting firm out there has a practice management system. That's what they run their practice on. And there are a ton of practice management systems out there. Some integrate well with others, some don't play well with others. One of the things that Brad and I talk with firms about all the time are your practice management system does not equal your sales and marketing engine, that automation engine, AKA your CRM. And the term CRM is so loosely thrown around. A lot of times people think their practice management system is their CRM, but it's so limited. Talk to me a little bit about your thoughts around a firm having both a sales and marketing engine as well as a practice management engine.
I think with the human capital constraints in the industry and the ineffective or inefficient management of the client base and workforce, they both should be there. They both should be running parallel, and they both should be eventually integrated to some point also, so that your system actually understands bandwidth, productivity, efficiency on this side, and it also could balance on the other side. When do we need to push a little bit more? When don't we? So I do think that
Yeah.
the balancing act is hard. And that's every organization, sales and operations always battle each other. You put them in a room and
No.
they're going to go at it. So like marketing and operations, or firm management, same situation. You got to balance it too.
Yeah, that's true. That's true. But
We did have that struggle, by the way. That is, we weren't expecting in past businesses that I had, when your operations team is not expecting the output that marketing is driving, it's another, uncomfortable place to be as well. So you really should balance them. It's not going to open the floodgates. Marketing isn't going to overnight open the floodgates, but you will start to see and anticipate, okay, where is this going in the next 3, 4, 5 months? And then you could control that with your ad spend a little bit to help balance the balancing act between operational capacity and then marketing growth also. But they definitely need to talk.
Yeah, you're right about that. That's a good point. You don't want to open the floodgates and then you can't deliver the product or the service. Right.
Yep.
Right. Very true.
Mm-hmm.
Well, I wanted to ask you one other thing. Where do you see in the next, because AI is moving so fast, it's kind of hard to have a vision for this, but given the, what you're doing with Arrive right now, where do you see this whole profession, public accounting, say 3 to 5 years from now?
Advisor, I think it's going to shift. It's going to shift into the advisory side. I think that, I think the relationships that these accounting firms build with their customer base is going to be beyond anything else that could be done in the market. If they could just get out of the compliance side of the business, not out of it meaning I'm not doing that work. I think that you need to scoop the relationship, and I think that your firm needs to handle everything from start to finish. But if you could remove yourself from the inefficiencies and you could really scale that side of the business or automate that side of the business, the accounting firms can now open themselves up to provide a level of service that probably wouldn't be able to be stepped into and competed with. It's very easy for a tech company to compete with bookkeeping and compliance type work. It's very difficult for a tech company to compete with true advisory consulting and getting down to that level. And I think you could build your relationships. I come from a family of accountants, which is like when I went into the accounting industry, like what I saw at the tail end of my father's career was eye-opening too. I mean, all of his customers that he's worked with for 20, 30 years are starting to sell their businesses. Who are they going to? All of a sudden, he's getting 6-figure checks coming in the door as his clients are ready to sell, stepping in, helping negotiate, running diligence, doing this, doing that. All of a sudden, the floodgates started opening, and I'm sitting there like, wow, Uncle so-and-so who's at our table, who's not really an uncle, but it was just a client of his for 20 years that became close, relationship with, selling their business, and everything starts to kind of come through. So I don't think, we need to be cautious, and we need to look at the long-term lifetime value of a customer. I think the accounting industry should continue to educate themselves through other industries. And when you're looking at traditional industries, businesses, it was big in the tech space. The lifetime value of a customer is really your number one metric to what you're sitting on and what you actually have and what you could monetize off of a customer base. We need to go above and beyond what our current understanding of that is today, and think a little bit longer term. When you're looking at your customer base, is your customer base aging out? Well, if it's aging out, it doesn't have a lot of market value if you're trying to sell it, but it has a tremendous amount of opportunity cost for you to get involved in your customer's business, position them for the sale, offer additional services, and help them along that way. So I think we have to reshape how we think of our customer.
What's also very interesting is that you have an explosion in the amount of small businesses that are being created, right? I think we're at like 35 million or something. And I think within like just a few more years, it's going to be 50 million. So that's a lot of new businesses coming in. And there's a lot of reasons why that's happening. I mean, do you have any idea, what's happening in the world that's causing that?
I mean, I know COVID was a huge impact on that. The remote lifestyle, people kind of going off of themselves. I think the ability for industries, with how technology is impacting a lot of these industries, is allowing these key personnel inside companies to say, hey, I could do this on my own, right? Like, I understand this. I conceptualize what needs to be done here. I could leverage, whatever's the driving factor in their industry. And I think that over the next 10 years, I think we're going to see even more. We have a concept at Open Access of the $50,000 startup. I am adamant that in the next 5 years, anybody could build a company for $50,000, no matter what level it is. I think that the $50,000 startup is here and it's coming, and it's because how fast technology is evolving.
I agree. I mean, I read so much about this stuff. I find it fascinating. You know, with technology, like you were saying, like, I mean, there's so much that you can do now by yourself. So you can like 10 times your productivity, and it's only going to get better and better. And, so existing companies are kind of, I guess, right sizing really, because they don't need, they don't need the help anymore. But it's much more difficult for like kids coming out of college, right? Entry level stuff is all being automated. So they're having trouble finding jobs, right? So I guess they're kind of forced to create their own, like, that's probably why they're going to just create their own business, and they can use the tools, and whoever can figure out how to, use the tools the best is going to be the most efficient and be able to, and then you still have, all the other stuff, your experience and creativity and all kinds of your knowledge on, how to, tie everything together, which is going to differentiate yourselves. But I think that's a huge opportunity. I mean, they're all going to need accountants, right?
Yeah.
They're going to need help with that. So I think the future's bright in that respect.
And at the end of the day, go ahead, Steve.
No, I was just going to say, I think they're going to need accountants, but we as accountants also need to watch out for when a lot of companies of that size comes into our ecosystem. It's very easy to be able to create automated services that drives the value down. And at what point does these small businesses that are stemming up, potentially 20 million of them, new ones probably stemming up in the next however many years, at what point does technology run those businesses and the need for accountants go away also? That's what we need to kind of keep an eye on as well.
It's interesting. I think a lot of it all comes down to the relationship.
I don't think you replace that human component of it. I think if anyone's truly automating, the human is not really touching the customer the way that they should. And that's what we need to focus on. Customer service first.
It's easy to automate. Yeah.
And I think our culture is going to change where, that human component is going to just become more and more valuable, and just value just in general of having that connection, the human connection, because we have so much, so much AI, so much automation, so much, not really knowing what's real and what's not real, that kind of stuff. Like, that's where we're headed. So I think when there's going to be this kind of demand, I would say, for that human connection. So the better that you can provide that, I think that's where you would end up. So once everyone's kind of doing advisory work, let's say, and, non-commoditized type work, then, then it's just a matter of how do you deliver that the best? How do you have the best customer experience?
So it's also where you differentiate, and where these CPAs need to work on differentiating. The better you are at advising and helping a business, the better chance you have of scaling and succeeding. And that's really where the cream will rise to the top. And that's where, if you're a CPA or an accountant out there that thinks that you're better, smarter, offer something that the rest of the industry can't, you'll have your ability to shine and rise to the top, and truly differentiate yourself. Right now, I mean, go look for help with bookkeeping. There's probably 1,000 solutions that you could jump into for bookkeeping, tax prep, all that type of stuff. The quality doesn't really matter at the level of customer base. That's 5 to 20 employees. The quality doesn't really matter. They're doing it because the government requires it, and that's really it. So how do we differentiate?
It's all a relationship. Well, Steve, thank you so much for joining us today. Really appreciate your time and all of your insights. It's a very interesting conversation, and I think our listeners will get a lot out of it. So thank you so much, and I hope you have a happy Thanksgiving.
You too. Thank you. I appreciate it.